Good morning, everybody. Nice to see you. Thanks for coming out. We'll go through our budget outlook update for the fall. And this is something that we put out normally after the budget. Normally we would have done this earlier because the budget would have come out earlier, but because it's an election year, everything got a little bit delayed. So Paul will go through a presentation, and then we will go to questions. And I think that covers it off. So
okay,
over to you.
Thanks, Peter. So this is our first update since the spring. And for all our projections, when we put them out, they're based on current and announced government policy. And we also are in this one comparing ourselves to the budget. The budget was done and released in April, and so it's a little dated compared to what we have. And so our presentation today really acts as like a benchmark against which the upcoming fall economic statement can be measured against. The government is supposed to release that by November 15th. Now we'll cover off our outlook, and we will start with the economy. So the improvement that we're seeing in Ontario's fiscal position is really been driven by the strong economy, which has had extraordinary growth in the last 2 years. As the pandemic shutdowns were lifted, consumers had built up a lot of excess savings, and they came out of when we reopened, and they spent a lot. They raised demand significantly, and real GDP growth rebounded strongly. It increased 4.3% in 2001, and we estimate that it will rise by about 3.3% in 2022. That's very strong. Normally, GDP grows around 2%, so you're getting above trend GDP growth in the last 2 years. And this rapid increase in demand coincided with problems in the global supply chain. So we had demand outstripping supply, and what happened? Inflation took off, and it reached the highest it's been in 40 years. In response, central banks here in Canada and across the globe reacted to the higher inflation by increasing interest rates at an aggressive rate. So both higher inflation and the higher interest rates are expected to cause a sharp slowdown in Ontario's economic growth as highly indebted households sort of moderate their spending growth, even though they still have some excess savings built up. We expect real GDP to increase by just 0.7% in 2023. That's much slower than the budget outlook of about 3%. And I would point out that we're not currently forecasting a technical recession, but the growth we have, 0.7%, that's very, very weak by historical standards. And an important point to note is that the economy faces a number of downside risks. Inflation could stay higher for longer, reducing confidence and purchasing power further. Central banks may increase interest rates more than we expect, and the effects could be broader through the economy than we are anticipating. And the current unpredictability in the war in Ukraine, plus China's COVID policy of locking down cities, that could create more problems for the global economy. So if anything, if we're going to revise our forecast, which we will as we go through the fiscal year, the risks are strongly tilted to the downside. On here, we're showing the government's fiscal position, the budget balance. And before we get into the outlook, I want to focus on the most recent fiscal year. If you look at that chart, and on the left-hand side, you'll notice that we had a $16 billion deficit during the pandemic year. When we came out of the pandemic and the economy opened up, things boomed. And the province recently announced that they had a $2 billion surplus. And that was in sharp contrast to both the government's forecast and ours. The government expected for fiscal year 2021, they thought it would be a $13 billion deficit. We were around $8 billion. And what happened? Got a $2 billion surplus. And how did that happen? Well, revenue growth has come in much stronger than anticipated. And I'll get to that in a minute. But when you have a strong 20-year record increase in revenues, your fiscal position will improve. In our outlook, as the economy moderates, revenue growth is expected to slow, but it will still outpace what we project for program spending. And as a result, under current policies, we expect surpluses that will grow over the outlook. They're very weak this year, like barely a surplus, $0.1 billion, but it grows to about $8.5 billion by fiscal year 2027-28. Those surpluses are in sharp contrast to the government expectation shown in the pink bars of deficits. And what could go wrong with this, right? What could go wrong? Well, there's two big risks. First, new government policies that cut taxes or raised spending, that would alter our fiscal outlook and it would deteriorate. And secondly, if economic growth is even weaker than we anticipate, that would negatively affect the province's fiscal outlook. I want to touch on the revenue story. And this is the strong gain we've had in revenue. It's a 20-year high for the increase. That's the primary story from going from an expected deficit to a surplus. And what was driving this strong revenue growth? Well, inflation reached a 40-year high, and this rapidly lifted the level of nominal GDP. Nominal GDP is sort of like roughly your tax base. It's what you tax. And so stronger nominal GDP, it means you're getting stronger spending, you're getting higher corporate profits, you're getting increases in income. And so when you apply tax rates to much higher levels of economic activity, what happens? Revenues take off. And that certainly happened last year. Taxation revenue, so PIT, personal income tax, corporations tax, sales tax, soared almost 20% last year. Just to illustrate how strong that revenue growth is, in that 1 year, fiscal year 2021, we saw an increase in taxation revenues of $21 billion. That 1 year increase was greater than the cumulative gain in the last 5 years that led up to that. So that's an incredible story there. And we saw it in personal income tax, which rose 16%. Corporations tax jumped 42%. And sales tax rose by a strong 14%. But that is not going to continue, and we've got a moderating economy. We see revenue gains averaging 3.5% over the period. And what this chart does is it compares our updated revenue outlook against the budget. And because of the strong upward revision in public accounts, our latest outlook is $11.5 billion higher than the government at the starting point in 2021. And even though the budget has stronger economic growth over the forecast, and that causes the gap to narrow, we're still $6.5 billion higher than the government by the time you get to fiscal year 2027. I'm going to turn it over to my colleague Jeff Novak, and he will pick up the spending story.
Thanks, Paul. Okay, we'll now look at our program spending projection and how it compares to the government's projection in the 2022 budget. We estimate that the province will spend $178.9 billion on programs this year in 22-23, which is a 5% increase from the $170.5 billion spent last year. Looking forward, we estimate that program spending will grow at an average annual rate of 3.2%, reaching $205.7 billion by 2027-28. Over the first 3 years of the outlook, the FAO's program spending projection is lower than the government's spending plan in the 2022 budget. We expect that program spending will be $6.3 billion lower than planned by the province this year, narrowing to $1.1 billion less than planned in 24-25. However, over the following 3 years, our program spending projection is higher than the government spending plan by about $0.7 billion in 25-26 and rising to $4.3 billion in 27-28. And Paul, if you want to switch to the next slide. So this slide shows the difference in spending forecasts between the FAO and the government, but on a more detailed program sector basis. The negative or red values indicate that the province's spending plan is below the FAO's projection, resulting in a projected funding shortfall, while the positive or black values indicate that the province's spending plan is above the FAO's projection. Overall, compared to the FAO's spending projection, the spending plan outlined in the budget contains funding shortfalls across all program sectors. These shortfalls, which exclude unallocated contingency funds, total a combined $40 billion over the 6-year projection. The sectors with the largest funding shortfalls include health, which totals about $23.4 billion over 6 years, followed by education at $6 billion, and then children's and social services at $4.3 billion. However, the FAO estimates that the government spending plan also includes a total of $44 billion in unallocated contingency funds over the 6-year period. The province will need to use these contingency funds to address the program sector funding shortfalls identified by the FAO, or, alternatively, make changes to lower program spending if the province intends to achieve its sector spending plan targets in the budget. If the government addresses the projected spending shortfalls using $40 billion in contingency funds, then an estimated $3.9 billion in contingency funds would still be available to introduce new programs, enhance existing programs, or improve the budget balance. Thank you very much. Over to you, Peter.
All right. Thanks. I'm just going to start off by mentioning a couple of things. So it's important to note that our forecast is current as of October the 12th, and we compare against the government's budget, which was introduced in the spring. So clearly there will be changes in their forecast as well, and we'll see those when the government releases its fall economic statement, which is supposed to happen before November 15th. In terms of forecasting methodology, just to remind everybody, we do our own. So we do look at private sector forecasts. We look at the government's forecasts, but we do our own forecasts of real GDP, nominal GDP. So we will always be a little bit different than the government. That's normal. And in terms of program cost forecasting, over the last number of years since we've managed to get us together and me take on this job, we've been able to develop our own independent forecast model. And what we do, in essence, is we look at cost drivers of the different sectors. So it's a bit of a cost accounting exercise. To keep it simple, what we do is we'll look at, let's say, okay, you've got so many hospital beds. Each hospital bed needs a certain number of people, a certain number of supplies, et cetera, and you allocate costs to those beds, and then you multiply out how many beds you've got across the system. I'm being very simplistic, but that's effectively how we approach program costing. So when we say the programs will cost X, it's based on current government policies now and the cost of delivering those policies. We've had extraordinary revenue growth, last year, which Paul's mentioned. We have extraordinary, good revenue growth going forward. We've talked about the shortfall in the sectors and the contingency fund. I think it's important to mention that the contingency fund, certainly there's enough money there to allocate to areas where we perceive to be a shortfall. But at the moment, it's nobody really has insight as to how those funds will be allocated, except for the government. So the government the way they'll do it is they'll have Treasury Board meetings and a Treasury Board decision to make those allocations. But those numbers aren't going to be made public really until we come out with our expenditure monitor, which will report on any of those allocations that will have been made in the quarter in question. So, questions? Lots of technical stuff here, but bottom line, we're seeing surpluses. We're seeing a crap load of money sitting in contingency that is unusually high, and here's where we start off before we start to see the fall economic statement.
Peter, could you just define what you mean by a shortfall, and then what that means generally speaking to the pocketbook of the average person?
So when we say a shortfall in funding, so what we do is we estimate the cost of, let's say, delivering on the healthcare program or the education program based on, let's take education because it's simpler. You have, so many schools, so many teachers, so many buildings, so many administrators, et cetera. And what does all that cost when you roll it all up? So how much does it cost is one line. How much is the government allocated to it in its budget is another line. And there's a difference between the two. And that's what we call a shortfall. The government could easily make up that shortfall based on the contingency funds they've set aside. They can make up that shortfall by changing the program. For example, on the school side is you can increase class sizes and reduce your need for teachers and reduce your teachers' expense. So there are ways to change the program. On the other hand, if they decide they want to go the other way, they can do that too. Does that help? So yeah.
When there are this many shortfalls across so many giant sectors, generally speaking, how's the average person impacted by this?
Well, at the moment, the average person will not be impacted unless the government decides that it's going to maintain that spending profile to the end of the year. I don't think they will, but it's not up to me to make that call. But if, and it's a big if, it's a hypothetical if, then yeah, you will see big program changes in order to meet those spending targets. But it's a hypothetical, and I think the fall economic statement will shed, I don't know, but it should hopefully shed a little bit more light as to what the government's intentions are in that area.
Peter, the last time you were here, you said that you hadn't quite built a recession into your assumptions just yet. Has that changed? What are you guys seeing on the horizon?
We're on the knife's edge right now. As we said, our economic growth as Paul says is very weak for next year. 0.7 is pretty weak. So we're not in recession territory yet. We don't think there will be one, but we think we're close. And if there is another shock to the system, if we have whatever, some big spike in oil prices, or there's some another lockdown, God forbid there's another lockdown, even if there's another big lockdown in China that will have an effect on the global economy, that could be enough just to tip us into recession.
Okay, and so what do we make of the fact that we're going to keep posting surpluses in the next few years, even if there is a recession or we are seeing weakening growth? Does that mean that Ontario's economy is a bit recession-proof?
No, I think what we're seeing is that, and I'll let Paul jump in on that in a minute, but what we're seeing is weak growth that seems to moderate going forward. If we have a mild recession, we'll see a little bit of an impact in those surpluses. We don't expect a big impact in those surpluses. So I don't know if you want to...
The one thing to note, that weak growth we have coincides with a budget balance. It's like $0.1 billion. So if our forecast is off and some of those downside risks materialize and we get a recession, probably that would push the province into a deficit. That's previous analysis that we did in 2019, looked at the hypothetical recession. And if you get a normal recession, you lose revenues. Sometimes spending has to go up. So when you're sitting barely at the bottom line, there would be some downside risk to your fiscal outlook should the economy contract.
Okay, and so these projected surpluses aren't necessarily a sure thing. They're not a guarantee. That being on the knife's edge could, and if we tip over, we could see those start to get erased.
Certainly could, but I think we'll, at the moment, if that should happen, we see it as a bit of a short-term thing. So I'm not ready to go and say that everything's up in the air, but because I think we're still in pretty good shape fiscally over the next 6 years, and it's really the next couple of years that are more uncertain.
Peter, peut-être juste en français parler aussi de l'incertitude en
Could you say a few words in French about uncertainty? So you're saying there's no recession expected for the coming period, but that could change based on a number of factors, including the world situation. Yes, we're expecting weak growth. We're not expecting a recession for the time being. That might change very much depending on the global situation. For example, if there's a change in the price of gas, or there's a big energy crisis, or there's a recession, a deep recession in the United States, that could affect us. That could bring about a recession here in Ontario that will indeed have an impact on our budget forecast. So based on your forecasts today, and if the situation remains stable, is there room for maneuver for the government to reduce taxes? If the situation rests as it is, yes, they have a tremendous elbow room. Not only is there a surplus, but there also is a contingency fund of some $44 billion, which does give them a lot of elbow room to reduce program spending or to cut taxes.
Does that mean the government has like budgeted money that they haven't delivered, or the sector needs cash that's not there?
When we say funding shortfall, what we say is, according to the government programs as they're structured today, our estimate is they'll cost X dollars to run. The government has only allocated Y dollars to that sector. So there's a gap, there's a difference.
Does the government know how much, like you do?
I would imagine so. I would certainly hope so.
Why wouldn't they allocate it now?
That's a question that the government would have to answer. So they have the ability to do that. And right now, they've got a bunch of money sitting in reserve, which is sufficient to allocate to close that gap. How they choose to allocate that money is up to them. We can't make any guesses as to how that
Is health the largest shortfall simply because it's such a large budgetary item?
It's a large budgetary item. Why is it the largest shortfall? Do we know?
It is a little bit more of a shortfall than its relative position. I think it's about 58% of the shortfall, and it's about 40% of the program spend budget. So it's a little bit more than on a relative basis than the other sectors.
Were you
So what
surprised?
should people make of that huge shortfall then in health? I mean, we've heard about the problems at hospitals with ambulance services.
So it's a great question. And that's the purpose for this report, is to be able to say, here's what we think these programs should cost, but here's how much money the government's allocated. There's a difference. You might want to ask the government what they have in mind. So that's the point of it. So yes, there are lots of challenges in health. They're making news every day. And presumably we'll see something in the fall economic statement or later on. So we anticipate other announcements to come.
Were you
So
taken
if we
aback by
see
that?
sorry,
Sorry.
if we see that huge number in red with a minus, I mean, are you saying that the situation in the healthcare sector is likely to get worse?
No, we're not saying that. We're just saying right now there's a gap in the funding allocated to what we estimate the program to cost. If that funding gap is not closed, yes, there will be significant impacts in those programs. Absolutely there will. But we don't know what the government intends to do going forward. One would assume they're going to allocate some funding to that area. But they, again, I'm not the government, we're not the government, and that's why those are great questions for the government. So I'm just going to go here and then we're going to go back.
I just was curious, you've done this before. Have you seen this type of shortfall in health in prior years?
What we haven't seen is this level of shortfall, but we haven't seen this size of a contingency fund before. Typically, contingency funds run around $1 billion a year, not 8, right? So this is extraordinary. We've seen big contingency funds during the pandemic because we didn't know, and nobody really knew what the heck was going to happen, so it was prudent to put some money aside. But it's unusual to put this much money aside now that things seem to be stable. So that's really the big change here. Is it a transparent way of budgeting? I don't really believe that. I think that when you tell people you're going to allocate X, I would say Y dollars in the government's case to healthcare, and the FAO says, well, actually it's going to cost you X dollars, but you got all this money sitting in contingency, it makes it a little hard to get some insight as to what's going on. Clearly, based on the questions that we have here, I'm going to go here.
Do you have the resolution of where that shortfall is, or is it just one lump sum? Like, do you break it down into hospitals, into what type of services are provided by the hospitals or other?
Yes.
Where does that resolution cut off, and where is the biggest?
So we have, it's a good question, and it's a tricky answer for me because we publish it at the high level. We have insight into more detail, but we're not allowed to publish that because these are cabinet records. So we do get access to cabinet records to help us do our analysis. But again, that would be a fantastic question, for the government to.
So where is your resolution? Just by ministry? Is that where it
It's
cuts
by
off
sector.
that?
We call by program sector. So health, education, that sort of thing. So in these policy areas is the level of aggregation. That
But
we
given the fact that the government or the healthcare sector is about half the spending of the government, you don't break it down to any finer details in what sector inside of health. Given that 4 or 5 ministries can be.
Yeah,
don't even equal.
Not in this report, but we will address it in further reports.
So our forecast is broken down at a very detailed level. We just can't say at that minute level what the difference is between the government's numbers, because we do know what the government's numbers are at that level as well. But that's the record that we can't disclose because it's cabinet record.
Okay, but given the fact that there's a lot of problems in emergency care, emergency rooms overflowing, we're hearing about sick kids today. Can you give us that number, that if the emergency rooms are not being funded sufficiently, or that's just outside of?
Yeah, that's I mean, it's a little frustrating because these are important questions.
Personally, it isn't.
And, well, no, that's what I mean. It's all for all of us, right? These are important questions. That's not the purpose of this report. The purpose of this report is to say at a high level, here's what spending looks like, here's what the forecast, the surplus/deficit forecast looks like, here's what we look like going forward, starting, as of October the 12th. And we are working on some additional analysis on specifically the healthcare sector, but we're not going to have that out for a little bit. We do have a piece coming out in the education sector in a couple of weeks' time. We're looking at the spending analysis there, the spending estimates there.
You see the hands hovering over the red button to hit emergency. Do you think that it is going to be the shortfall in funding is going to be a crisis in the emergency care, healthcare part of the sector?
Well, I think, it's always easy to say if we throw more money at something, it'll magically fix itself. I don't know if that's the right answer or not the right answer, but certainly there's a problem that needs to be fixed. I think we all agree that there's an issue around emergency care that's been making a lot of news because it's a problem. How that problem gets fixed is beyond the scope of this report, and it probably has more to do with probably money is an important piece of it, but I imagine there are other pieces that are important as well.
Yeah, Peter, can you just get back to so you were talking as a principle of budgeting? The idea of having a budget that lays out a number of years of spending is so that hospitals and post-secondary institutions and everybody can figure out how much money they're going to have 2-3 years from now and spend it. You're saying basically this budget, the government's got this pot of gold money that they could solve everybody's budget problems with the stroke of a pen. What kind of a budget is that? I mean, it renders the budget useless, doesn't it?
Well, I think it's. There's a use for having some contingency. There's a use to try to address things that are unforeseen, and we've certainly come through the last 2 or 3 years of period where we've had a lot of very unforeseen consequences, circumstances because of the pandemic, and it is prudent to set aside a little bit of money to be able to address that in case you can't forecast it. I think in this case, these are very high contingency funds, and it doesn't really shed a lot of transparency as to what the government really thinks it's going to do with these programs. Now, bear in mind, we're talking, let's say $8 billion on a $180 billion spend. So we're not talking like half the budget. We're talking a percentage. Nevertheless, it's important, I think, from a transparency point of view, for us to be able to say, here's what we think the programs will cost, here's what the allocation, we think there's a gap, and leave it at that. So what happens with that gap, how it gets addressed, is going to be will remains to be seen.
Peut-être juste vous entendre en français là-dessus sur les fonds non.
I have another question. So these unallocated funds, is this a very transparent way to put forward a budget? These unallocated funds are indeed an important question. There are a lot of uncertainties. It's useful, it's prudent to set aside a certain sum of money. But the money set aside now is much larger than in the past. And it is a bit of a blow to transparency because we don't know what's going to happen with these funds. It's a lot of money. It leaves one with the impression that there's planned program spending that is insufficient. And this might not be the best way. In my opinion, it does undermine transparency to set aside such large sums of money.
A question from my colleague Charlie Pinkerton. I'm not sure if you kept tabs on the start of the committee's estimates reviews, but we're aware that at least one, the Social Policy Committee, will be holding just 2 days of meetings to review 4 ministries' spending plans for 3 hours apiece. A few months ago, in an interview with Charlie, you warned of the slippery slope of normalizing the budgetary process that the government has taken this year. So given what you've expressed before, how do you feel about the shortened
I feel like I'm a minister here. I don't know. Words are being used against me. No, that's fine. I did say that, and I still believe that. So yeah. Is it sufficient? No, I don't think it's sufficient. I think it's going to be pretty tough to examine a $70 billion spend in the 3 hours I think that they've allocated. That being said, there are always good questions that can be asked. There are always key issues within a program. It's not every single aspect of a program that needs to be examined. Usually there are some key points. The fact that in this time around we're only going to have a week effectively. The different committees are only going to have basically the week of the 14th to do their work on estimates analysis is partly a consequence of the timing of the election and a bunch of other things. And hopefully, as I said to Charlie before, this is a one-off because of the election, and we can get back to something a little bit more normal, that we've seen in the past, with a little more time allocated for MPPs to basically do their fundamental duty, which is to hold the government to account on the raising and spending of public funds. And to do that, they need to have the time and the resources to be able to ask the good questions in order to perform that fiduciary obligation. Autre question?
Just a technical thing about the projections of how much the government will need to spend that you've made. Often the government's, when it reports its numbers, it says, oh, we actually underspent what we thought we were going to spend, and they give a bunch of reasons why. I mean, there are disagreements about how much these programs are going to cost, aren't there? They have their own estimates, and maybe they're right and you're wrong, isn't that?
Absolutely, no question. And this is the way we do it. We are transparent about how we do the work. If you want to get in and dig through our numbers, cabinet net record notwithstanding, we can show you our work. Could we be wrong? We could be. We aren't usually, but it could happen.
And unforeseen could occur. For example, fewer children enroll in school.
That's right.
These kind of things.
That's right. No, there could be. No, these are all forecasts. So we're based our forecast on what we've seen in the past, what we anticipate is going to happen, and we could be wrong about that. There could be reducing enrollment. We saw that during the pandemic. Enrollment dropped. Partly explain the underspend in education. We might see a whole bunch of people, not be sick. I'm making this up, obviously, but certainly demand drivers can change, and demand drivers are the biggest drivers to the cost of these programs.
Here, I'll just add that we usually see in the current year that the government spends less than they planned, and so we are forecasting a spend that is lower than the government's number in the first year. And then it's in the out years where we find that a big divergence between what we think the programs will cost and what the government has done. So it's kind of typically we're lower and then we go higher.
Yeah, that's probably a good point to reemphasize, is that in year one, this coming year, we're seeing, if you will, an over allocation to the health sector, higher than what we would have anticipated.
Thank you.
All right.
Yeah. Oh, sorry. Anthony Bowman, Finance Director for Eligible Evil.
Okay. I think we're good. Thank you very much, everybody. Pleasure. And if you have any further questions, comments, want to have a backroom discussion based on how some of these numbers are put together, whatever, feel free to reach out to us. We're happy to walk you through how we've done our work. Always happy to do that.